And good day. This is the Eye of the Storm podcast with the big picture technical update for the S&P 500 and the NASDAQ 100, being recorded on Saturday, February the 10th, 2024. Not the busiest of weeks, but still extremely strong gains made in both the S&P 500 and in the NASDAQ 100, and for that matter, also in the Dow Jones and in the Russell. In fact, the Russell, I think, might have been percentage-wise the big winner on the week. And there's been a sudden new influx of capital or just movement towards the small to mid-cap stocks. Interesting. And as has been brought to my attention, there seems to be a dollar IWM or RTY Russell connection there, that as the dollar rallies, that certain things happen within the Russell. So right now, that seems to kind of be playing out a little bit. Nonetheless, I'm going to start here with the SPX. I'm going to begin on my weekly chart as I always do. If you're brand new and this is your first time listening to the big picture update, I'm going to start with that big picture. Technically, for those that are following me all along, there are no changes. But I'm going to leave open, as you can see, I've got none of the fibs on here because I'm going to reconstruct the fibs again, just showing anybody who's new or those that just need and want to review how I build those pictures as far as the Fibonacci resistance levels come in. Okay, starting on this weekly chart, I have at the highs that we saw in January of 2022, and in the cash market, it was at 48.18. In the futures market, it was 48.08. Kind of in reverse, but that's the way it came out. In any case, at that high, it marked the completion point for, on my screen, a cycle degree third wave. And so that puts the market in a cycle degree fourth wave. What will be inside that cycle degree fourth wave is an ABC of primary degree. So those are going to be labeled in the green. So thus far, we have only completed the primary A wave of cycle wave 4. We remain in the process of putting in the highs or finishing this move, which will be a primary B wave of cycle wave 4. So if we move over to that, what is going to be inside this primary B wave? Well, it'll be three waves labeled ABC of intermediate degree, of which on my screen, those are labeled in yellow. And so far, inside this primary B wave, we have as complete intermediate waves A and intermediate waves B, which puts us in an intermediate C wave up, which will complete then the primary B wave. So what's going to be in this intermediate C wave up? I'm going to immediately bring it down, and I'm going to look at the 4-hour chart. In fact, I'm going to open it up so that we can see. There's the intermediate B wave. This kicked off the intermediate C wave up, and it's going to consist of 5 waves of minor degree, which are labeled in that goldish brown color, and they're in the Roman numerals. So we have minor wave 1, minor wave 2, minor wave 3, minor wave 4. So that puts us in minor wave 5. Now, I'm looking for 5 waves of minor degree to be complete to finish the intermediate C wave. Well, here we sit in minor wave 5. So what's going to be inside minor wave 5? 5 waves of minute degree. And those are labeled in this grayish white. And here I have minute waves 1, 2, 3, and 4 complete. Now, what's that leave? To complete minor wave 5, which will complete intermediate wave C, which in turn will complete primary wave B. I have what's left, one minute fifth wave. How long could this minute fifth wave take? Well, it's actually been underway since the end of January, so thus far it's not been too terribly long, but it certainly has covered a lot of territory. In fact, it has climbed since the 31st of January over 200 S&P points. So it's already turning into a fairly big move. Excuse me. So what's going to be inside this minute wave 5? 5 waves of minuet degree, of which I'm counting as complete minuet waves 1, 2, and as of Friday, I believe minuet wave 3. So what's left in this whole pattern, which began in January of 2022? A corrective pattern can start down on that high. So what can I say about all of this thus far? We're close to finishing that primary B wave. What else can I say? I'm going to go back out to that weekly chart because that was the high. So basically what we'd be looking for here, and I'm going to go ahead and put that up to start rebuilding my fibs. So initially when that high came in, and the first thing that I could map out would be what are we looking for in terms of how far down should we come? Well, the first thing I could start to map out is I'd have to go back to where cycle wave 3 began, and then how it all came all the way up here, and I'm going to run retracements. But now that wave A is done, I'm going to run my retracements for a B wave. And that would include, normally we could get between 50 and 62%. Well, guess what? We've gone all the way up and now we're at new all-time highs. So a lot of people are going to begin to ask, how could that be corrective, Michael? How can we call this a corrective wave 4 when we're making new all-time highs? Well, Elliott, in his brilliance, told us about what he termed as an irregular B wave. And within that irregular B wave, what is being told to us is that the market will go up and create a new high or a new low, a new high above, a new low below where that correction began. In this case, we're in a cycle fourth wave. So we are counting out the cycle fourth wave. So we're going to the cycle third wave where the cycle fourth wave began, which is at 48.18. Well, Friday, we closed at 5,026. We're well above 48.18. So it's an irregular. So how does that kind of work itself out? Well, Elliott made clear that through his observation and his charting and everything that he came up with, that there are Fibonacci levels that we can begin to associate. And so when we start to get that new high or new low being put in place, we can add 2 additional levels. And those are going to be 1.236 and 1.382. Now, being that all the others, all the way up to 100% or the equality version level, I'm taking them off because they've all been exceeded. So as far as the primary B wave goes, we do have 2 more Fibonacci levels that the market is capable of, not going to, but it has the potential to rise up to those levels. The balance is going to be up to the market. And as I always talk about, it is going to be the structure which will take precedence over a Fibonacci level. So let me just state those levels right now. The 1.236 is 5131.80. So we could say 5130 to 5132. Give it a nice small little window to kind of play there. 1.382 is at 43.25. So we could say 43.24, 23, up to 53.30, let's say. And that would fall within a reasonable range around 1.382. Now, what we have going on in between is within the primary B wave, we have completed intermediate waves A and B. So we now can start to formulate or put Fibonacci levels together for what can we expect from a C wave. And so let me go ahead and put those in. So, and we're building where we think the market or where we believe the market can get to complete this wave. All right, so now the most common here is that the C wave would be equal to the A wave. You're going to find equality and Fibonacci and Elliott fall into place more often than you would think. And you'll see as I break this down how that 100% or the equality comes up again, right as it's being used in the lower levels. It is comparing wave 5 to wave 1. So right now we're comparing the C wave to the A wave. The 618 level, it does come in. It is not the most common. Again, the most common is 100%. And the second would likely be, in terms of correction, would be 0.618. And because that the C wave, one of the, not a requirement, but one of the guidelines for an ABC is that wave C will take out the high or the low, depending on the direction it's forming, of wave A. Well, that did. And so then it came down to structure. If the structure showed it being complete at 47.93, well, if we could account 5, which I think at one point we basically could have, but it came out just not as clear. And it did complete 5, but it was just wave 3. And then we had a 4, and now we're in a 5. So this one, 47.93, exceeded, and now exceeded quite a bit. So we go in and we remove it to not to confuse. So now that level is gone in terms of being resistance. Now, what's that leave for our C wave? Well, wave C would equal 100% of wave A at 52.19. Well, on Friday, we got as high as 50.30. This is the cash market. 5,030. So we are less than 100 points. Well, actually, less up at 100%, excuse me. It would be less than 200 points. But it's not necessarily the target. We still have some earnings reports. We still have other catalysts that could come out and just really pop the market and just really kind of pull it in and shove it higher. And so I'm going to break this down, but we leave that there. Now, I'm not saying that's where the market is going to go, nor am I saying that either of these two levels is where the market is going to go. But they're there. And technically, they are possible. So they carry potential. Now, I'm going to start to come down. So what I've got is I'm starting to build my picture. Here's the primary B. Here is the intermediate C wave. Let's start moving down and see what we can come up with. So I'm going to come down. I'm going to go into here. And I'm going to open this up because now we're just going to look at that C wave. So we have Fibonacci relationships. And here on the minor degree, we have minor 1, 2, 3, and 4. We're inside minor wave 5. Okay, so what can we use? First of all, we're in all-time highs and in uncharted territory, as I call it. So where are we going to find resistance? We've never been here before. Well, we have a couple of levels that the Fibonacci relationships begin to suggest, and that would be resistance. But again, as I've talked about, what takes precedence now is structure. So in an effort to continue to build on that, I'm going to go and I'm going to use what is available to me via the Fibonacci relationships. And that is we're in wave 5 as it relates to wave 1. In this case, it's a minor fifth wave. So my comparison is going to be to minor wave 1. So I'm going to go now and I first take the distance of minor wave 1 and I connect it to the low of minor wave 4. Now I have my levels for minor wave 5 on a Fibonacci basis. So those relationships, well, 0.618 is not the most common. The most common, again, is that wave 5 will be equal to wave 1. And that came in at 49.69. Came in and it went at 49.69. Now, according to the count, we hit it and we started to tumble down. So I had to say, well, that there's a possibility that wave 5 is done, and then that would complete everything going up. If minute wave 5 is complete, then minor wave 5 is complete, then intermediate wave C is complete, and then primary wave B is all complete. And it could have been right there. But what did I say at the time? What's going to be most important is, again, structure, folks. And on an hourly chart, I needed to see 5 waves down. 5 waves clean down off of that high at 49.69, I believe it was. We didn't get it. We got 3, and the rally picked up again. So it became wave 2. So off of this minute wave 4, we again can use some fibs. So here's the minor, and now because we've exceeded them with some good force, the next one up is 1.618. So the first most common is that wave 5 will equal wave 1. We just saw that. That was at 49.69, exceeded substantially, so that comes off. What is the second most common? 1.618, and that sits up at 5,147. And you'll notice it's like, we're building a little bit of a cluster here, just a little, where minor wave 5 would be 1.618 of minor 1 at 51.47. But outside of that, we have the primary B wave, 1.236 level at 51.31. Wow, nice cluster within 16 points of each other. We've got a little cluster building here. How much more upside can we get? Well, right now, we're kind of getting a nice little thing pointing right up there to 51.31 to 51.50. Somewhere up in there. And again, then we've got completions of the minor wave 5, of the intermediate wave C, of the primary B wave, because again, it now becomes structure. Okay, so now we're inside this minor 5th wave. And so it's going to consist of 5 waves of minute degree, 1, 2, 3, and 4. Well, now I'm back in place, and I can add one more layer. And that's going to be where I have minute wave 1 and to minute wave 4. And now I'm getting my next layers. So minute wave 5 would have been 100% of minute wave 1 at 49.62. Well, that already got taken out. So I come back over here and I go to edit, because there's no sense to keeping these two on there because they both have been exceeded. Oops. All right, so minute wave 5. Well, here we are in minuet wave 3 that we believe may have completed on Friday at 50.26 or 50.30. So this is where it starts to get interesting. That's 1.618, where minute wave 5 has already been 1.618 times the length of minute wave 1. That's okay. That's a fib number, fib level. But it's ending up as if it's 50.30 is what this was, within 3 points of the 1.618 for the whole thing. Well, that's where wave 3 completed. So we get a wave 4, and then we get a wave 5. So what's the next one up beyond that? 2.618. And guess where that comes in? Now we've got another cluster within that cluster of all of our levels, where we would have minute wave 5 would be 2.618 times the length of minute wave 1, over here, sorry, at 5,050. We have 1.618 from minor wave 5 at 5,147, I believe it was. And then we have for primary wave B, the irregular 1.236 at 51.31. So suddenly I've just built a zone in the cash SPX, in the cash market, from 51.30 to 51.50. And now what's going to be my probability? Well, I've just increased it a whole bunch. Now this one, I could leave it there, but to tell you the truth, I just think it's wave 4 or wave 3. So I'm going to take it off because I think it could be exceeded maybe in Clobex before we even get back on Monday. So here we have it. Now I've got a little bit of a cluster. Now what I got above all here? Well, there's that 100% for wave C. Now, if this really turns into something and they plow higher still, well, now my cluster is like going to go from 5130 to 5220. Now, you saw how it free flowed to the upside on Friday. And what starts to happen, the sellers are just starting to scatter. If they don't have a reason to sell, then you're going to be hard pressed to find offers just kind of sitting out there. They're going to come in, but they're going to come in higher. So as the market just races up, trying to fill whatever it can fill, or for whatever its reasons are. On Friday, we had expirations. We had strong moves in NVIDIA once again. We had strong moves in Microsoft. We had Apple. We actually had Tesla deciding to climb back into life and closing up above 193. This is a stock that was trading below 180 just at the early part of last week. So we're seeing these large swings in the prices, a large swing in the volatility, a large swing in the options market, the gamma flows and things that happen within that. So these are the changes that are now presenting us with how is this market going to go up? Because the conversation about interest rate hikes or cuts, interest rate cuts, has actually almost been put on hold. Even everybody's basically coming out and saying, oh, no, they're going to disappoint, they're not going to start cutting in March. It might come in June, maybe it'll come in May, maybe it'll come in July, and now that conversation is going. And then suddenly there's a renewed conversation, not widespread yet, but a renewed conversation about inflation starting to roar its ugly head one more time. Would that then suggest that maybe they don't cut, but maybe they don't necessarily raise? If they feel they can get a grip on this and stop it without tacking another hike on there, we'll have to wait and see. But they're going to have to figure out how to get money off the balance sheets, how to pull this in, how to pull money out of the market, out of the system. That will then begin to do what? Well, this is a very natural process, although a lot of people don't want to think about it. It's called deflation. It's called recession. And if it's almost gauged and guided or whatever, it may not be as painful as we all think. But in any case, I do feel that the equity prices are extremely, in my view, overextended. They're overbought. It's just putting way too much into what people believe, or what even an analyst is going to come out and say that he thinks the stock could get to this price based on this number, that number. I can give you fib numbers in these individual stocks that'll show you the moon. But I think the reality is, it's like, folks, the money supply, the public, these are all that they have products, and we have to buy these products. It doesn't make any difference how many chips get sold for AI, for gaming, for everything else, if nobody has the money to buy the game, if nobody has the money to really put that into use right now. Now, that's not suggesting that AI is going to flop. I don't think it is. But AI is in development right now. And the uses of AI are in development right now on various fields, in the medical field, in the energy field, in the exploration, like mining, different things. Those are going to begin to use, and are beginning to use, artificial intelligence and the algorithms that scan, that work, that find in the earth, they find the gold, they find the silver, they find the copper, they find different things, and then it just improves the chances of, when you're drilling, that you're actually going to get something versus you're getting into an empty nothing. So they're improving cost factors, improving a lot of things, and that's really going to take hold. So, but is it ready right now? Some is, but not all of it. So what happens if we have put too much emphasis on the fact that NVIDIA is just going to make money after money after money after money? And believe me, it's the job of the CEO, the CFO to tell you that. Oh, we're just going to keep making money. This is the best chip. The gaming industry is just going to take it over. That's their job, to hype it up. Now, I'm not saying that NVIDIA is a bad company or any of these are bad companies. But we're seeing when they get to a point where somebody takes a step back and goes like, how much? How much do you want me to pay? Well, I'm getting a little squeezed over here because I got to pay more for my utilities, for my gasoline, for my whatever. You no longer have that little bit extra. And by the way, folks, if you take a look at consumer credit, it's going through the roof. More people are maxing out credit cards. Not a good sign. So we're running into this picture where things are beginning to gang up. I've been talking about the leading economic indicators. I'm going to bring them up again. The leading economic indicators, along with the markets, fell to that October 22 low from the all-time highs. Our first leg down, the primary A wave, completed in October of 2022. And at that point, the market did a launch and just started to head higher in a B wave based on bupkis. I'm calling it that because it's truly what it was. Markets are extremely oversold. We're back on. The rally's going. We're not done. Blah blah blah. And everybody jumped in because there was too much money in the system. There's too much money in hands that they just want to go put it in. They want to make it all a winner. I get all that. It produced a B wave. Go study what B waves are psychologically, characteristically. What is the personality of a B wave? We're living it. And it's ending in typical B wave, blow it up style. Now, again, please do not misunderstand me. I don't think NVIDIA is a bad company. I think, hey, their products are definitely being put to use, and AI is not going to disappear. It's just now going to go way beyond gaming, folks. Way beyond gaming. And I'm telling you right now, it's going into the medical. It's going into exploration, mining. It's going into pharmaceuticals. And how we come up with the formulas to fight the diseases that we're now finding drugs that can really go in and take care of these cancers and diseases. So this is I hate to use the word, but this is like for me, the intelligent use of artificial intelligence to make the work. So how quickly can artificial intelligence run through all of these equations which would take people a lot longer, and then to get things to trial, say in a drug, and then to run all those tests to see what is the probability that it's going to be successful before you even get to your phase 1, phase 2, phase 3 trials. So this is the exciting thing about artificial intelligence. How much time can be saved if we're doing oil exploration, or if we're doing gold or silver mining exploration, or just other precious metals, or different things that involve taking a look under the ground. Artificial intelligence scans and picks up a lot of information and gives a lot of conclusions that could save time, effort, and money. So what is it going to do? It really is making efficient a lot of things that were not always as efficient because of human factor. I'm sorry to say. So that's why we hear so often, it's like, well, artificial intelligence will start to replace humans. And because it's going to be able to do the jobs. This is all coming. But back to now. So again, I'm not saying that Apple's bad. Any of these companies are bad, but because they're producing great product. What I'm saying is like we're way ahead of this game. We're way ahead of what we think these companies are going to do now versus we better wait. So reality's got to catch up to where we are. All of the exploration, all of the implementing these chips, all of this getting it down, perfecting it, making it all work. That's now, I think, going to catch up. But that's not the job of the CEO. His job is to get that stock price as high as it can get so that they get their bonuses, so that the shareholders are happy, et cetera, et cetera. That part, I think, is going to remain the same. So there's going to be a different trigger that's going to bring this all to a head, and that's going to start to move down. And unfortunately, I think it's going to be more tied to inflation, deflation, interest rates, just all the things that really do plague us versus, oh, gee, that's the newest chip and I'm going to go buy that game. So not pinpointing exactly what, because I don't know, but a catalyst, and I think we're getting very close. So once we get there, then again, I'm going to be looking at my hourly chart for the development and the execution of 5 waves down, put in by the market, not by me, by the markets. What's going to be the catalyst? You know what? We got so much stuff going on, not only in our country, but around the globe. There's so much going on. It's just going to take one to trigger something. It triggers this, it triggers that. Next thing you know, it's kind of like, it just kind of like everything falls in and go poof. And as that happens, things change. I think we'll all survive, to be honest with you. I think there will be tremendous amounts of trading, but I do see this all coming to an end. Now, let's get back to this picture right now. For next week, I do believe we still have upside to do. But if I'm just going to be counting, and I'm going to go down to my 1-hour chart so we can kind of pull this in. If I'm thinking that we've finished wave 3, I don't know. We have to see how this all comes out on Monday morning, or actually tomorrow in Globex, to see how they want to do it. But I just want to say, if we're going to take it from the high, at 50-30 high, and we're looking for a pullback, well, 3A2, look at that, right back down to the previous 4th wave. Wow, clean as a whistle. And so I'm looking for maybe something brings back to 49.87, 49.88, or even as high as 5,000. Well, we got above 5,000. Now suddenly it's going to become support. The same place where that call wall sat for weeks. Now it's support. And then we have 49.87. And then we still have an additional leg up. But when that comes through and I can get that 4th wave, I got my last layer. Then I got my last layer. And then I will be looking for it to go above 50-30. All right. I'm going to go back out here to my 4-hour chart. And then we have all of this. It was above 50-30. Oops. That one. 51.31 to 51.50. Nice cluster. And it does complete. It completes a minor, it completes a minute, and it completes the intermediate. The intermediate C would complete by itself, just along with, by the way. But it puts a cap on that primary B wave. A long time in the waiting for that B wave completion. Now, technically, or just internally, the markets continue to just decay. All right, we're going up on less volume. We're going up on that as far as relative strength. That's a new all-time high in the S&P. And there it is there on the relative strength. Okay, so we couldn't beat the high that we hit on the 19th of December. So lower high, higher high, lower high, higher high, lower high, higher high. Higher high in price, lower high in relative strength. Same thing in the MAC. Yep, it's heading higher, but same deal. Okay, so there's the high in the MAC. There's the next high in the MAC, but it's a lower high. But we got a higher high in price. Here's the next high. Same deal, folks. Lower high in the MAC, but a higher high in price. And then one more time. It eked out so that it could be equivalent to what had happened here. So what's that tell us? It is crumbling. We have a dollar that seems to be very happy sitting above 104. Not good. Not good. Not good for the stuff, I have to tell you. And my feeling is in the dollar index, the dollar needs to get back below 100. And I'm thinking they could do it pretty quick. I'm thinking, say, well, what happens if the dollar just starts to collapse? What's going to happen out there? What do we get? Well, first of all, I think the bond market will turn around and rally like, you know what? Right? Because they're going to be looking for safety. They're going to be looking for the lock-in yields. If yields aren't going to go up, and so yields will drop if the bond price goes up. And the bond price is going to go up because they're going to shift money there. Well, what could be happening to the equity market if the dollar starts to really give it up? Well, I think it goes down. All right. Gold go up, stocks will be down, bond prices will go up, yields will go down. And then we start to see things just to start to break. So that's kind of what I'm looking for in that respect. Now, enough about that and all the commentary before, because I always tell myself I'm going to try to not make this as long. And then they end up being as long. So let me just continue here, going over to the S&P, the futures market. Futures market, it's really the same type of a picture. We got up to 5,048 on Friday. Glory be. So again, let me go out because I'm going to start to rebuild here like I did over there. I will start putting together for the future, for the futures market. Let's just go take a peek here. I can do it this way. Let me just go here, and I'm going to put, this is A, B, and intermediate wave C. So that 618 already gone. So we're going to take that off. We're going to come up with pretty much the exact same picture as we have, of course, in the cash market because they're totally related. So, but 5187 is where intermediate wave C would be 100% of intermediate wave A. So it's equality, works perfectly. All right, so now we're going to come down, and let me go to my 4-hour chart, and let me open up this, and now we're going to put up that minor degree right there. I'm going to bring it over to here, right there, thank you. And now 618, again, gone, 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 and actually 100% is also gone, right? 100% equality for minor wave 5 as compared to minor wave 1 was 49.92. Well, we got up there, we played there twice, and then we broke it, and that was that. And it did not look back. And as I said last week, that's what it needed to do. And it did it. So we get rid of those. So on a minor degree, what's our next level? 5171. Oh boy, guess what's right there? Now we got that C wave at 5187. We're building a little bit of a cluster. But now this is pretty big, right? So what do we have above it? Where's that 382? That's up still pretty big. So it looks like we might come in between 1.236 and 1.382 on a futures basis. On the futures basis. The cash basis, that 1.236 is right in the picture. But the future, because it carries a little bit more premium, so it's a little bit higher. All right, so now we've got one more to add. And that is going to be, I can bring this down to just clarify just a tad for me. All right, so now we have, oh, I can't. Sorry about that. I always think I can. I have to remember. Okay, so actually we'll just go this way. So we have minute wave 1 to minute wave 4. And we got 618, 100%, 502, right? 5002, gone. So we're going to edit those. We're going to close those right out. Bing, bing. Pull it in. 1.618, 5086. Now, look, this is getting a little bit more interesting. But 5086, remember 1.618 inside for the cash market was at 5033. We got to 5030. So that's pretty close in the cash. In the futures market, we were a good 50 points away to the tick, 50 points away. So it's still valid as a level, but now it's pulling down or increasing the blow off, right? So I'm looking for a fourth wave, and then I got one more calculation where I can put in minuet wave 1 to minuet wave 5. but it might start to fill in, and our cluster could be here, and then we have, for as if it's going to be a blow off, we have this. So it looks like in the future it might actually end up being a much wider cluster for where this all could be complete. Now, one thing I want to add, this is for Monday or even the start of Globex tomorrow. If we did reach that high and we're going to pull back without going up and creating a new high, then let's just take a look at what the possibilities are. Oops, so I want to put in just my retracements, and I'm going to go right there. So retracements 382, 5006, isn't it amazing? We're going to find support to hold and turn the market higher above 5,000. It all gets very, very interesting as we get closer. Now that's most common, 38%. Now the market seems tending lately to hold itself well above that level, and that would be 5022. That would be minimum. We come down, actually I think we get a little bit of profit taking, I don't know, and we come down to here. Where it can't cross is there, 49.98. That's the top of wave one. Now, if I take that out by saying that it was just an anomaly and I come down to my line chart, well, now we got a little bit different story. We can come down to 49.75 on a line chart, on a close basis. Sometimes you can be a stickler. We can go up here and it's going to be, probably would be cleaner here, 49.83. This was a pump and a quick dump. So the body of the candle is down here at 49.72. And that's where the line chart puts it as well. Right now, I'm saying the top of wave one is 49.97. So I prefer that it held above 5,000 and then starts to climb again. That's what I'm going to look for. Same deal. If I pull these out, close the ranks up a little bit, you're going to see, there we go. There's the high, and that was back in January. Here's the next high in price, lower high by a lot. Here's the next high, equal high, and then the most recent high, yep, it did eke it out in the futures market, but still lower high than the end of January. Same deal, higher high, lower high, lower high, ekes out a slight on that new high. All right, so that's the S&P. Bottom line, still looking for another high. Drew in our fibs. Let's look for a pullback, and then we'll get another rally. Over in the NASDAQ, I'm going to start here with the NDX. And so we can start to rebuild here. Let me go out to my weekly chart. We'll take a peek. It basically is the same story. And again, the reason being, folks, the reason why the NASDAQ and the S&P are like joined, like Siamese twins at the moment, is because of tech, because of the high tech. And within that, because of the Mag 7. The Mag 7 right now within the NASDAQ 100 are most of the days are capable of controlling 50% of the movement, up or down. In the S&P, that equivalent is 30%. 7 stocks out of 500 in the S&P, 7 stocks out of 100 in the NASDAQ. That's how high they are priced. That's how strong these moves have been, that those stocks can control that size of a percentage of the entire index, of the entire NASDAQ. So is it really a healthy reflection of the NASDAQ 100, of technology? No. But yes. So each one of us can have our own opinion there. All right, let's start to fill in these blanks on where and what we can do. First, we're going to put in for our C wave. And so I'm just rebuilding it because they actually have always been there. Right again, one more time, 17,452, that was 618, which is the least common. So I'm going to get over here, and I'm going to take it off. So wave C will equal wave A at 19,549. Is that where you think it's going to go? Not right off the top of my head, but it's out there. Because what I would then expect is that this whole, all of it's going to start to wrap itself around 19,000 versus 18,000, 200 or 300. Okay, so that's kind of what we're looking at right there. Well, we still got a lot to fill in, right? Because this C wave is now dependent on structure. And within that C wave, we have, there's the B wave bottom over here, minor 1, 2, 3, 4, consists of 5 waves of minor degree. We're in that 5th wave. Okay, let's start to fill the blanks with inside. So again, I'm going to come up here to the top of wave 1. I'm going to bring it over and touch it to the bottom of wave 4. Already 618 out of the ballpark, 100% out of the ballpark. And that happened, 100% happened last Monday, the 6th, excuse me. Yeah, the 6th. So I guess it was Tuesday. Just kind of goes, doesn't it? So quickly. We gained, yeah, we're taking out the 618 and the 100. So as far as minor wave 5, what do we got? Okay, now we're building it back around that 1.236. Because 1.618 minor wave 5 would be equal to 1.618 of minor wave 1 at 18,306. Okay, now let's add another, since we're here on this chart. And we're going to go, that's the bottom of start of wave 1, minute wave 1. I'm going to put it over to minute wave 4. And we can see that 100%, 618, they've been exceeded. So we're going to go over here and we are going to remove them. So minute wave 5 would be 1.618 times the length of minute wave 1 at 18,179. 180. Notice the cluster again around that irregular 1.236 level for primary wave B. The SPX and the ES wrapped itself around the 1.236 level for the primary B wave. Now, you're going to see what am I got going on here? A minute wave 5, a minor wave 5. So let's see if we get that 4th wave in here. And then we get a 5th wave. What's that going to look like? Is it going to pull it in here, or is it going to bring it up into here? Minute wave 5 would be 2.618 at 18,827. And then we have that 1.382 up here at 19,180. So first cluster's here. Again, don't forget, we could sit sideways, futz around, futz around, futz around. Because we have NVIDIA coming out on the 21st. And you know what? They could come out and this thing could pop like the balloon that it is, race up there, and that's it. And everything gets rejected from that point. And that point could be here. That point could be here. I don't know what they could do to that stock. It closed well above 700 on Friday. I've already looked before when it was still trading closer to 500. And they were out putting on positions at the 700 level and the 800 strike. So, hey, you know, who knows? So, but anyway, back to the cash chart. Those are our levels. Now, again, we'd be looking for, I can bring this down. We're looking for a wave 3 or just a correction. So that's going to come in from here to here. Oops, did that wrong. Let me use the right ones. We're looking for retracement. Looking for here to here. 382, 17,792. There's the previous 4th, so that's right in the hood. 17,052, I think it was. We'll call it 50. So it was something where it got to, I want to tell you, last Thursday. And this was all Friday. Great little run. So once again, we can do that. come back down, give that a test. 17,792 to 17,007. Let me see what that low is. 50, 17,750. So you got about a 40-point window to draw it all in. This level, I don't want to see it below. And that would mean 17,680. Oh, yeah, about 680, 678. So don't want to see it below that because then it starts to break the wave pattern down. And I don't think it will. Then excuse me, please. Let me get a little bit of water, clear up the voice. There. So that is where, let me look for that, excuse me, where we start to look for wave 4. Get wave 4 in there on a minuet level, then we got minuet 5, minute 5, minor 5, and we put it all together. So I do think we're getting that close. But I am not going to rule out that we get this blow off that runs up there, and those are the levels that get rejected. I do not consider that we're breaking out. I think the breakout came a long time ago. So I think that we're finishing up. Let's go over and take a look at the futures market. All right, so back out to my weekly chart, and we can see we have same levels, 18,250, 19,167. And I can put on my other one right here, going up to there, going down to here. Okay, 618, done, gone. So let me get rid of that one. And what does it tell us? That we have the 100% of that's at 19,718. Same deal, across the board. The C wave in the S&P, the C wave in the NASDAQ, up there, top of the limits. Above, excuse me, above the 382. So where can we go? Let's start to fill in the lower blanks and see what we come up with. I'm going to drop it right down to that hourly chart. And let's open this up. And we want to look at minor wave 5. Again, 100% gone, 618 gone. So we're looking at the one. You're going to find that they're all going to come in the same. As we go through each one, we're immediately already getting rid of 100% 618 because we've already cleared them. I'm just doing a review, showing you how I build my levels. Now we have, for minor wave 5, our next level is 1.618, 18,376. Am I saying that's where it's going to go? No. I'm building a cluster. I'm building a cluster. That's what I'm doing right now to give us a range of where I think the market can come in. And then the last one here I'm going to put in is for minute wave 5. And so 100% gone, 5618 gone. So you can see those also. We just take them off because they've been exceeded. No sense to leave them there. But what do we have? Look at that nice cluster we have. Same. So again, the S&P and the NASDAQ seeming to cluster all around 1.236, both the cash and the futures market around 1.236 for primary wave B. So in essence, we've had that number since October of 2022. It just didn't seem like it was going to do that. That wasn't our number one choice. But I've repeated it, and I've repeated it, and I've repeated it all along the way. Each time I said, the market's going to tell us not, Michael. But I threw it out there because it had to be kept in focus as potential, as a possibility. Now we're getting ready to knock on that door. So why do we want to consider that the market's going to be breaking out? What has changed that's going to tell us that, oh, no, everything's turning positive and we just keep going? Hope does, sure, but reality speaks differently because, again, our internals are telling us differently. And both RSI and the MACD, and both in the leading economic indicators, which is just a longer term, they've been declining. since October of 2022, right? We came down, the market headed up, the leading economic indicators continued to decline. So a lot of things, it's like, it just, yeah, we politicize things. The market has become politicized. The things are just skewed. So I do feel that this is a major top. I do think it is a major top. Do I think it's the top? No, not at all. This is a cycle degree fourth wave. But I do think that we're going to come back to, here in the NASDAQ, closer to where we were in October of 2022. Right? So, you know, a little bit below, maybe a little bit above, but that would be the area. In the S&P, we're also looking back at that low. Now, in the futures market, in the S&P, that's 3,500. Yes, fair piece from 5,000. I'll grant you that. But it's not necessarily a crash. A crash is something that happened in 2008, 2009. A crash is something that happened in the NASDAQ in 2000, when the NASDAQ peaked and then lost 87% of its value in 2 years. 87% of its value. So, if I'm thinking that this thing tops out, let's just pick one. It tops out at 18,000, I'm going to say 275. 18,275 times 87%. That is 15,899. 87% would bring the index back to 3,000. And I'm thinking, no, 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 no. And what comes after all that, when that is done, is that we have a cycle degree fifth wave back up, back up. So we got to deal with a whole bunch of stuff in between and clean up this whole mess. Clean up the mess with interest rate. Clean up the mess with the balance sheets. Clean up the mess with the excess capital. Clean up the messes that have been created politically to pull us all through, or whatever the story is. Put things back on an even playing field. Let's all, let's play the downside. And there'll be plenty of money to make. And then those that can only think I got to buy, keep your powder dry, folks. It'll get there, and then you're going to want to load up. There'll be so many things to load up on. And basically, a lot of it's going to be artificial intelligence. It is what is going to be the next sector. That's my call. If people are thinking it already is, that's like, nah, I don't think we've seen anything yet. It's much, much more widespread, folks. It really is. Rather than NVIDIA, which puts it into gaming. It is so much bigger. It really is. That's where I'm going to stop. Don't want to keep going. I want to thank you very much for listening to me today. Again, if you have any questions, you can leave them in the comment section. Please don't be, don't get wild on me. If it's concerning the market and you can logically speak about the market, please leave me your account. I have no problem. I welcome all of that. What I don't welcome is just one-line statements or just somebody trying to knock me down or whatever. That won't work. But if we can keep a conversation going, that'd be great. If you have a question that you want to address to me personally, you can always send me an email at michael@mjf1partners.com. I always answer my emails, and I welcome them. In the meantime, have a great Super Bowl tomorrow, everybody. We cannot forget, and guess what? I live in San Francisco, so you know who I'm rooting for. And so have a great Sunday. Enjoy the game. And the next update will be the Elliott wave update, and that will be on Monday, February the 12th.